Good morning, everybody. Welcome back to Schwab Coaching. Our next topic this morning, or our first topic this morning, is Trader Talk in today's market. I am your host, Kevin Horner. It is a sunny and beautiful morning here in Denver, Colorado. Hope it's the same where you are, everyone. Glad to see you here, though. Today, on this fine day, we'll be talking a little bit about the price action of the market following yesterday's FOMC rate decision, the 25 basis point cut, and the anticipation, or rather perhaps the expectation, that the market will be getting another couple of cuts here between now and the end of the year. So we are going to see a bit of a bullish open to things today. We're going to talk about that, look at some levels, hit some stocks in the news, and review our example portfolio. We have a position in there that continues to be bullish in nature, and we're going to look at potentially elevating our exit strategy. So with that, you can say hi to my friend Barb Armstrong there in the chat. She's going to keep an eye on all of you, make sure you're all within the proper parameters here. Of course, you guys always are really great to each other. So thanks for being that way. Of course, we appreciate the ongoing conversation, the community of chatters here. It's a strong one, of course, and we enjoy having you all. So I'm glad you're here, everybody. If you're not already doing so, you can follow Barb and me on X. We're available there individually, try to post for you throughout the week. And without doubt, the X location there following us is the best place to engage with us beyond the classes that we offer for you here each day. So you can follow Barb Armstrong CS, and I am Kevin Horner CS there. Try to get you a number of key charts and potentially important data points throughout each week. So let me also kick it over to disclosures, and then we'll get down to the business of the morning. So please remember that our conversation here is only informational and educational. We are not in the habit or business of making recommendations here. We are, however, going to talk about technical analysis. And when we do that, we remind you that we're simply offering up information and education of technical analysis, considering concepts and strategies traders might choose to employ in their own trading process. But remember, we do not encourage you to make your decisions exclusively based off technical analysis. In truth, trading in general is one big giant puzzle. And if you are going to be trading, fantastic. Make sure that you're considering multiple pieces of the puzzle before entering, exiting trades, etc. Now, as far as our agenda goes, even on a solo Thursday, we pretty much follow the same plan. We'll look at the major indices, work through some sectors in leadership or lagger positions, talk about some stocks in the news, and like I mentioned, have that example portfolio with a position we put on a few weeks ago that continues to remain in trend, and we're just going to talk about trade management a little bit with that position. So let's go ahead and kick it over to the S&P 500, see how we've acted since yesterday's announcement. You can see that on this chart, we've got a little bit of volatility with yesterday. We had one of those, we might call a spinning top price action, where basically our close was pretty close to our open yesterday. We opened yesterday at 66.0487, closed at 6,600 on the nose, pretty much 6,635 pennies. Now that tells us a little bit. So first of all, it lets us know that bulls and bears both had some leadership at some point yesterday, right? We had bulls and bears both in charge at various points. We had pushed the price up, we pushed price down, but ultimately we went nowhere, basically closing where we started. And so many traders would look at that as a bit of an indecision, but today we are opening up at new highs. Looks like with our intraday trade thus far today, our new high may have been achieved. So previous 66.27, and we're through 66.27 right now, so making new intraday highs at the moment. Of course, as I was talking with Ben yesterday, we covered, traders utilizing perhaps the 20-day simple moving average in orange, utilizing the 50-day simple moving average in purple. Take your pick. This really is trader's choice, everyone. It's important that we traders know how we are going to approach. And when I say we, that's the royal we, but ultimately what I mean is us individually as traders. Where do you change your tune? Where do you decide that you can afford to get more aggressive or decide that you need to be more defensive? Where do you build cash? What are those steps? So for some traders, a close below the 20-day would be reason to tighten position, lifting some shares from the trade, building cash. As you can see, the instances since April 23rd, as I recall, back when we recaptured the 20-day moving average for the first time, instances below the 20-day have been very limited in scope. So we've had literally 1 day beneath each time with a maneuver right back above the 20-day. And so this gets us back to the idea briefly of confirmation. Remember, it's important that we individually define what we deem to be confirmation. It's not important necessarily that that you utilize what I think is confirmation or what your grandmother thinks is confirmation, but rather what makes sense to you individually. And we talk about this all the time. My job is not to tell you what is your risk tolerance, it's to remind you that you need to define that risk tolerance for yourself. For some traders, it's the 20-day. And I say some traders, it might be traders right now watching the S&P 500 that are thinking it's the 20-day because of the consistency of this trend. If you're a trader, however, that has a longer window of time, maybe you're more intermediate, maybe today's conversation here in Trader Talk is one that you visit once a week instead of every day, or you watch the market week to week or even month to month rather than day to day. And it's been said before, and it's not wrong, that day-to-day market action is widely considered to be noise. Doesn't mean it can't be tradable, doesn't mean it can't be opportunistic, but for many traders, the day-to-day market movement is just too much. There's too many confusing signals. There are too many short-term patterns that make it difficult to ascertain the true trend of the market. And so for some traders, pulling back a little bit, extending their time frame can be a better approach. So if you were that trader who needs a slower time frame, maybe monitor the 50-day moving average dating back here to when we broke the 50-day. That wasn't much further than April 23rd. It was May 1. So now you're looking at basically 3.5 full months above the 50-day moving average without an actual, we haven't even kissed it yet. The low here didn't get to it. That was the closest we got. And I'll remind you to do the math, everyone. If you're thinking about it, saying, well, I can sustain that pullback, I can manage to hold down to the 50-day moving average, and then if the 50-day breaks, I'll be a seller. Just remind yourself of what that means in your positioning. That would be about a 3.5% pullback to the 50-day moving average. I don't think many of us would call that a much more than a standard pullback. The question is whether you're comfortable giving that amount up in form of profit. We know you're in profit, right? Because you couldn't have bought it at a higher price because the S&P is at all-time highs. So at this point, the thought is, are you a trader, an investor who wants to take profits off the table at upper levels and anticipation of a pullback or maybe expecting a little bit of a drawdown? Or are you the trader who just says, you know what, I stick with everything in trend until the trend changes? And if you're the latter, waiting for the trend to change, well, you haven't really had that. And the instance where that would happen might very well be an open or a close, maybe most likely a close below the 50-day, right? Many traders wait for closing values to validate exit strategies. So maybe a close under the 50-day would be significant. It is about 220 points away, though, everybody. So be aware of that. We are staying strong in the S&P 500. Now, we are getting a little bit of an exuberant move this morning, almost 1% here in the NASDAQ 100. And you could see that the layers that I've built in here have to be extended now, everyone, because look, we've moved out of this lovely range we'd been in here. This was let's call it 23,000 on the NDX up to almost 24. So if we just use some round figures, 23 to 24 gives us an approximation of another 1,000 points in the NDX to the upside. And why do I say that? For some of you, You might very well be new to this conversation, maybe new to technical analysis. For many of you who are here frequently, you hear us talk about things like measured move all the time. But let me just provide a little color here. As an example of potential opportunity from a trader's stance, I'm going to zoom in to basically May forward here. And so, like I said, we had this at about 23,000 and this layer of resistance at about 24. And again, I'm just using round figures. You can be as precise as you might like here. But that 1,000 points, now that we have broken it to the upside, you can many traders would look at this and say, I'm going to try and take the range that we were in and add the height of that range to the top of that range. Meaning, if we break out from a 1,000-point range, as we may have done, then traders might expect a 1,000-point level above us from this ledge. So from 24, we'll just duplicate that line. Let's go up to the 25, just a little under or in the neighborhood of 25,000, just to give us an estimation, okay? Now, further, you might consider, what is the timing of that? Well, it is basically the amount of time. For most traders, I should say, or many, the concept is you take the amount of time it took to develop the range. So in this case, maybe, let's say the third week in July until we busted out here in the second week of September. So you've basically got about a 6-week window. Some traders would then say, all right, 6 weeks to target the 25,000 level above. Okay. So again, an estimation of the time frame it took to build the consolidation can be added on a breakout and give you 1,000 points to the upside in this approximate move and over another 6-week window of time. So that's the concept there. The alternative, instead, you can target obviously and maybe be an exeter in the neighborhood of 25,000. Again, everything that we said about the 20-day moving average, the 50-day moving average, and the S&P 500 continues to be the case here in the NASDAQ as well. NASDAQ making new all-time high with the opening moving prices today. 20-day here has been a bit more porous, we should say. Maybe we've been through the 20-day for 1 or 2 days beneath it. One significant day, day 2 beneath it, before day 3 we were right above it. You can see though that the 20 and the 50, this consolidation window right through here really allowed the 20 and the 50-day moving averages to come closer together. And that's just a function of price going really sideways for that 6-week window here. So minor violations of the 20-day brought you to the 50 instead. So we've actually had a test of the 50-day moving average. In fact, we did so right here with that green candle, opening below the 50 at a level of horizontal support and then moved off of it to the upside. And in fact, that's gone pretty well for us, because as of right now, if you bought the bottom dip to the range, you'd be up about 6.5% almost from that move, just off of the test of support. And remember, that's exactly how some traders will manage those sideways consolidations, right? They look for their opportunities to enter when we are sitting near levels of support. And yeah, there's some movement in the NASDAQ today tied to the semiconductors news out of NVIDIA and Intel coming together. We're going to look at that in just a moment. So you are getting a little bit of leadership out of the NASDAQ today. Now, I'm going to bring us to the Russell 2000. We're going to look at the small caps, which are also up well today at about 0.75%. You can see that candle yesterday. Pretty interesting day there for small caps, wasn't it? As we try to decipher whether we think rates are going to improve by going lower, or if they are going to get a bounce in here. Today, it looks like we're bouncing a little in yields. We'll be looking at the chart here in just a minute. But notice that candle, like I said, very busy day, but essentially a doji. Look at the numbers on this. Open 2406.1, close 2407.34. That is a different, we were up by 1.24 points for the day in the Russell 2000. So, but notice that high was 2453. So we had an explosive move to the upside and came back. Explosive in the sense that we ran to resistance, and it is resistance, everyone. Remember why? Those are the same peaks that we saw twice back here in November and December of last year. So not an unexpected location for a pause or a bit of selling on a volatile move. Obviously, if you're bullish in the Russell, you would have loved to seen that candle stay filled in and resemble something like this candle here that we got a few weeks back, where you had a beautiful filled in candle all the way. So that's notable. But now today, yes, we've opened higher, gapped up, and maybe the fact that we are above basically the high close right now, let's watch that. Some traders might keep an eye on that level for the day, not wanting to come back below it. If we take a peek at the intra-period chart, this is a 5-minute bar, and that white line that I just drew in is pretty close to coincident with the pivot point on the day. So some traders might be looking to maybe reduce position if they couldn't see the Russell maintaining levels today. Perhaps those traders will watch this purple line, the pivot point based on yesterday's open, high, low, and close. That pivot being the equilibrium price for the day, the price around which traders might expect the Russell to trade for the majority of today's action. So we'll see if that level holds, but perhaps 24.18 becomes very important for both short-term and maybe intermediate-term traders. We'll see how today plays out there. As I mentioned, though, we got to look at yields because when we talk Russell and the importance of yields as it relates to small caps, we'll take a peek here at the TNX. So the 10-year has rallied a bit. This is kind of consistent with the last time that we made a move. We had been down into the back in September of last year, down here around 3.7, 3.8, and basically pushed yields dramatically down. And it was after the rate decision that we started getting a massive push to the upside. Now, all of that stated, it has reversed course, and we are back under the important there 4.2. The question is whether maybe we are maybe this is the extent of the rally that we get here. Look at that. We are right into the 20-day, right into a gap level in terms of this yield. So if we get through here, you could see some pressure assigned to these groupings that are tied directly to interest rates, right? So we wouldn't want to necessarily get above this 4.1.5, but more clearly maybe 4.2, that level from which we sold 4.2 that took us all the way down to basically 4, right? We sold off 20 basis points pretty quick. Didn't take long, and that would maybe be a more appropriate spot for finding some semblance of resistance for some traders. So maybe monitor that 4.2 level there on the 10-year, everyone. That could be significant for us. And maybe also we could draw a downtrend line through those recent peaks, and that can give you an area of confluence as well. Notice where that kind of comes together here. If we bounced, and you can't expect, when doing technicals, we know better than to think that our levels can hold to the penny or even the dollar. So remember to consider these levels of resistance to be ranges as opposed to definitive lines, right? You expect to get price action through horizontal levels of resistance, through horizontal levels of support, and maybe pay more attention to how they finish on a closing basis at any given time. So bear that in mind in your process as well. We'll talk about that a little bit when we get to looking at the example portfolio, because as I mentioned this off the jump this morning, the position we have in our example portfolio, the example trade we have on, has been working for us, but we've been incorporating exit strategies along the way, and increasing our exit strategy, elevating our stop orders along the way has been our process. But the fact that we are elevating our stops and relying on ranges, we're giving ourselves more wiggle room every step of the way. It's very important that we do that. So I'll talk a little more about that when we get to looking at our example trade. Now, the group moving significantly today certainly is the semis, up 2 3/4. We can go back and discuss the range opportunity here. Again, yesterday, Ben and I were talking about busting out of the range. Can we look for more upside? And it looks like, again, this was, all of July, all of August, and half of September. And that is basically what, 10 weeks? Well, we may have made the measured move target in the form of just the last week now. We're basically pretty darn close to it up there now, 2.8%. Again, largely, I think tied to the move in Intel today. NVIDIA is investing $5 billion in Intel common stock. They will, at a purchase price actually of $23 a share, $23.28 per share, subject to customary closing conditions. There are, of course, required regulatory details for this deal to be applied, but it's pushing the semis a bit today. So NVIDIA, as we take a peek at some levels here, NVIDIA is at an interesting spot, having maybe been broken down a little, found horizontal support at that 168 level, and then bounced from 168 up to the confluence of the 20 and 50-day moving averages. This is an important level for NVIDIA, everybody. The main reason being that at 175 here, you've got traders who are watching the 20-day, traders who are watching the 50-day, and we are below both. So if those traders who are trend traders, if they're disciplined trend traders, they might be at a point of moving on from portions of NVIDIA positioning. And that could just be based on the fact that we're below the 20 and 50-day moving averages now for 2 days. If NVIDIA gets back above that 50-day very quickly here, back over 175, that could change, certainly, but nothing definitive, obviously, as of yet. Now, you could also be the trader who says that's all well and good, Kev, but the 50 and the 20 don't matter as much to me as maybe the 168 ledge of horizontal support, which has been tested and held now many times. As you can see, we've been really fighting it out over the last couple of weeks here at that level, a number of key trades, and then the 183 level above us. So maybe some traders are thinking, hey, we like that 168 zone. We can be buyers at 168 until 168 isn't held. And then maybe we can trade this up to 183. That gives good risk versus reward for bullish traders who are able to be picking up shares near 168, who believe that the horizontal range we've been in here is more important than the trend that we may have been breaking right now. Kind of an interesting spot. So we'll see how that plays out. But let's look at what it's doing to Intel this morning. So Intel on this news, needless to say, getting a nice little pop, and that is absolutely having an impact on the semiconductor space. So I think that's kind of notable here this morning. Let's take a look at this on a longer range chart so we can define what has really happened here. Look, this was a significant area of resistance. The stock had struggled after breaking down. Remember, once we break support, what once was support back here can become resistance. And as you can see, we were into the resistance band a number of times here. We've been beaten back on this one, beaten back on this series of intra-week highs, and beaten back on this one. And so you could be forgiven, for being a little more maybe instructive, or maybe asking Intel to prove it to you before being willing to be a buyer here. Well, unfortunately, on a news-based move, we don't get those breakouts that happen live and in the moment. So you get an exceptional gap to the upside. I say unfortunately, if you missed out, if you weren't long in the last 3-4 weeks, then unfortunately you've missed out on a significant gap maneuver. We'll see how that goes from here. But the significance of the move cannot be understated, because we've actually acquired that 100-week moving average for the first time since back in the summer of last year. Now, of course, the question becomes, can we set that as a level of new support? Some traders might consider that new support to be coincident with these last lows that were in here a while back. Maybe I could push that level down a little bit to make sure I capture those. Maybe it's actually the 100-week, but Whatever the case, traders, you need to have those levels set for yourselves. Know where it is you want to move on. Know where it is that you want to stick with things. So that is not a bad move by any stretch today, but defining it as a trend-breaking situation might need a little bit more time. Let's look at that on the 2-year chart for you all. All right, now see, that looks a little more appropriate, right? Another option here. So a couple of things, everybody. Many traders would look at this low here. So this is a big significant gap low when we had a breakdown on earnings, creating this new range that we had to trade in, right, for so long. And that new range was basically 18 to 26. And then if you add that $8 range from 18 to 26 on top of your 26, it might give you a $34 target. And that'll be somewhere in this vicinity, right? So maybe something like that as an approximation of target. But new traders are certainly not going to want to see Intel trading back below the gap that it's set for itself. So maybe some traders will consider today's intraday low as an exit. Some traders would need more time for that to be absolutely defined, and other traders might look at that low from back here in July of last year, which was the gap low. Okay, and that's about 29. So that's still giving up 2 points from where we are. That might be a little more risk than some want to be in. So just be aware and keep an eye on that, everybody. Okay. All right. So that I wanted to make sure we touched on the NVIDIA and Intel deal as it relates to semiconductors, because we are clearly seeing a nice move in semis today at up 2.6, 2.7%. In terms of leadership today, sector leadership, we are getting it from our tech. No one should be shocked by that, as we just got done talking about semiconductors and the importance there. I'll put this back to a 1-year daily. And so here we have basically a gap low open, a gap low test yesterday, I should say, that got bought up. And now the technology space hasn't made new highs while the NASDAQ 100 has, but you are certainly getting a bit of leadership nonetheless out of tech. Many traders would say the fact that you're above the 20-day in this action here, so I'll just put an oval on all of that. This stuff, the fact, if I redraw that line a little bit just to make sure I capture all of that. Now, see, doesn't that look different, right, than everything else? This all looks like a consolidation through here, and now you've got 5 days above the consolidation. It might, if nothing else, traders, give you all something to consider for an exit strategy. If I take that line off and give you a little more clarity here. So some traders now could look at this and say, all right, well, we've got a level right here. Right here, right? The level we tested yesterday can be an exit strategy for traders in tech, right? Under here, maybe they get a little indecisive. Maybe traders decide to take a little bit off. And then, of course, a move under the 50-day would be a significant level as well. But don't forget to consider the prior levels. This could be matching lows in here. You can see we tested this. These are all slightly higher highs, or higher lows, pardon me, as we've pulled back to the 50-day moving average. But even a violation of the 50-day moving average could be an indication of weakness to the horizontal support. That wouldn't be great. That'd be about 180 points lower from the 50-day. But if you still held into that level, that would still be, for many traders, supportive in nature. We've been there before. So watching that on tech might make some sense for intermediate term bulls, perhaps. Other leadership this morning from communication. My goodness, we've just continued to take this one to the upside. Look at those tests along the 20-day simple moving average there, everybody in orange. Those ovals representative of opportunities to join the trend at what many traders would consider to be low risk levels. Low risk because they tend to move on if you get violated, right? If you make a new short-term trade or a low below the last low, they might choose to move on. But this has held up exceptionally well. And for some of you, the 20-day moving average is now too slow. Look at where we are. We are 23 plus points above the 20-day moving average in this space. So, it's about a 5% move, I think. Let me test that. Let me put this to the numbers. Let's see if we fell down to here. 5.75%. All right, good, quick back of the napkin math there, Kev. About 5.75% to the 20 days. So again, my encouragement is not to be a seller at highs, but rather to do the math and determine if you're a seller on a breakdown. That means you got to give up nearly 6% to the downside before you decide to be a seller. If you're good with that, tremendous. Stick with it. If you're not good with that and you say things like, well, I don't want to give up 6% for a sell down to then be selling. Maybe I'd feel better if I owned only 75% of what I have. And if we fell 6% and then violated the 20-day, I'd sell more. But a lot of traders take comfort from the idea that selling into strength allows them to maintain profits. Not everyone, but some. So once again, we're going to come back to Kevin's principles of trading, and they are my principles, but they're generic and vague in nature. The first being, of course, have that plan, right? Know how you want to move forward, know what actions you want to take when the market does certain things. Additionally, define confirmation for yourself. Is confirmation 1 day below support, 2 days below support? Is it 3? Is it 5? Take your pick. Define that for yourself. Number 3, are you a trader who is comfortable waiting for a trend to break before selling? Or do you like to sell into strength, which may allow you to maintain more of your profits, being a seller as groups of stocks, as individual positions move higher into areas unforeseen? This is all-time highs in the communication space here. This is not a bearish chart, and I'm not trying to tell you that it is. What I am telling you, though, is that if you're the trader who is looking to capitalize and doesn't want to give up 6% on a potential pullback to just what could be support, well, then you can certainly pat yourself on the back and take a small position off at these elevated levels. And maybe that selling a little gives you even greater confidence to stick with the larger remaining portion thereafter to allow that trend to keep doing what it's doing, right? So that's what I want to encourage more than anything else. I'm encouraging a plan, I'm encouraging a thought process, and I'm encouraging definition for what will help you to make those decisions live and in the moment. That's the hardest part, right? We need to be able to make those decisions quickly and in the moment without emotion. That's the key component. Hopefully we all take that as a thought when we're looking around here in the market. Now, in terms of laggers today, you know what? We don't have a whole lot. Yes, we have some red. Our biggest red in terms of the sectors, though, are consumer staples, which we can understand a little bit, right? When the market is believed to be in rotation detail, we would see staples perhaps step into things here. But what we've seen from staples for the better part of the last 5 months is consolidation. We've basically set a new level in here. Got support, could be said we've had some resistance, but we are not seeing staples trending, which can be a healthy reminder that if staples aren't trending to the upside, well, then our technology spaces, our leadership is in risk assets, tech, discretionary, etc. That's where traders are finding themselves. Yesterday, we got a little bit of a spike in staples, not a surprise or a shock, given the opportunity we had to maybe sell down the market a little bit. It just didn't come to pass. And so you're seeing a bit more of a pullback, just a pullback to support. So we're not going to overshoot expectations here. This level of support could absolutely hold. But I'll tell you what, if we got exuberant once again on risk assets in the coming weeks, what you may see is a decision by traders to say, you know what, that Staples move that we thought might materialize in the near run isn't going to happen. If you see Staples break down, it is potentially a relationship move with your risky assets moving to the upside and continuing that aggressive push. So let's monitor that. Let's see, do we continue to get leadership from risk on assets like technology and semiconductors and discretionary stocks, etc., in which case we would perhaps expect continued struggles or consolidations in defensives like Staples. Additionally, let's see, let's just peek in on our other two. We talked briefly about healthcare yesterday, which managed to have held this interesting spot, hasn't broken up to the upside just yet. We talked yesterday about the importance of getting through this area right here, confluence of our downtrend line, horizontal resistance, below 200-day moving average. We have a lot of detail working here. So moving through it would be significant. That's really the takeaway on healthcare. What about financials? Financials moving to new highs in the short run. This is a pretty positive move out of this. I thought maybe we would see a little bit more of a patient move. I was wrong, clearly, because financials moving to highs. Let's take a look. Well, actually, let's do this. We got to hit a couple of more stocks in the news this morning on a couple of upgrades before we move to that example portfolio. So let's pick on two here. We have Nike. Nike was upgraded today at RBC Capital, upgraded to outperform from sector perform. New price target on Nike at 90, up from 76. RBC sees a steeper revenue recovery for Nike than the street estimates reflect with their new product contribution and World Cup selling. The company is, quote, taking the right steps, end quote, and is seeing improvements in the running footwear offer segment, according to the analysts. So they believe that Nike is entering into a quarterly beat and guidance raise cycle with limited downside on a per share basis. So the range that I've drawn in there, that rectangle, is pretty intriguing. And the fact is that the lows of that rectangle, having maintained and held the 200-day moving average, in fact, the last low hasn't gotten there, that might be a pretty important spot, everybody. That coincides at around 70. That's a pretty good ledge to keep your eyes on for short-term bulls. Remember, what we've seen is a lengthy downtrend be broken here in Nike. So if this is what many traders would suggest, which is a downtrend break followed by consolidation, well, then it could be argued by bullish traders that maintaining the 200-day moving average is all Nike needs to do. If it gets below the 200-day, those traders would move on from such a scenario. But right now, it is above it. It's been as high as 80 or so. So you've got about a $10 range for consideration. And that means that new traders might be able to step into Nike in here, holding as long as it closes above 70 going forward, and then maybe considering either exit strategies in the neighborhood of 80 if it gets up there, or maybe they wait for 80 to come into play and then start thinking about potentials for breakouts. But nonetheless, an upgrade in Nike is notable. What's most intriguing to me as a trader is the fact that they've made this change only after the stock has consolidated. They didn't do it based back here when the stock first moved through the 200-day. They let time pass. They let this all play out a little bit. And now they're looking at this saying, all right, we've had essentially, from the fundamental side, optimism associated with going forward expectations, taking the right steps. I like that quote that stands out there. So, many traders are going to probably hang their hat on that. But more than anything, the technical difference here is the fact that we've been above that 200-day for now all of July, all of August, and 2 weeks in September. So you've got a potential shift to what was a downtrend, potentially developing into an uptrend. So that bears watching for traders there. I also had an upgrade on CSX. And that's notable because that, of course, is in the transportation space. RBC upgrading CSX to outperform from sector perform. New target on this is 39. That's minimally up from 37. The firm views CSX shares well positioned under any consolidation scenario in the railroad sector, meaning I believe M&A, merger and acquisition. The company is positioned regardless of what happens with the Union Pacific and Norfolk Southern merger, and the analyst tells investors in their notes. So hey, this is something to keep an eye on regardless of what comes down the pipeline with UNP and NSC. But technically, pay attention once more to that 200-day moving average. My goodness, get that line back in there, everybody. There we go. Look at that. 200-day moving average, coincident with the recent lows. Many traders would say below 32, everything changes. But today, you might be looking at not just a hammer, but my goodness, everybody, hammer candle at former support. I mean, that's pretty notable for some traders. That's the highest trade we've seen since here, August 28, and possibly more. So that bears watching here on a potential for an upgrade. Now, we are running close to time, so I do want to spend my final couple of moments here looking at the example portfolio. So I had a trade on in the example portfolio in RTX, Raytheon, or formerly Raytheon RTX Corp. Now, we took a small position, admittedly, not a huge trade here, but let's bring this one up so that we can talk briefly about what has worked out for us. I'm going to put the trades on the chart here so you can see those. Here is where we bought at 142.53, and the plan was very simple. We're just going to hold this until we have a break in the trend. Now, what have we done? For those of you who don't maybe make every one of my Thursday shows here where I'm solo, we had a stop order in at the time that we made this pullback, and we missed getting stopped out by less than 5 cents. And the way we built that stop was to take the 20-day moving average at the time that we put the stop in, and we went beneath it by the amount of the average true range, or ATR. And guess what? When I replaced this trade, we moved our stop order up from down here. It was like at 140, I want to say it was like at 143 approximately, 143 and a quarter, whatever it was. We moved it up a few bucks when we made those recent highs. Well, here we did the exact same thing. We went to the 20-day moving average. We went beneath the 20-day moving average by the amount of the average true range at that time. And look at the pullback we made here. That pullback came in at 150.82, and our stop order is 148.48. So we still haven't been taken out of it. Now, can we make an adjustment to this right here? We could. We could base this on the 50-day moving average in purple. Some traders would prefer to use that recent low. And the way to do that, once more, take that recent low and reduce the low by the amount of the average true range. The average true range down below, I don't know if you can see it, it's $2.53 or $2.50 approximately. It changes every time I move the cursors there. So let's call it $2.50. So $2.50 below our low here at 150.61. So $2.50 below, that puts us at 148.11. Now, we're not going to reduce our stop order, everyone. So we're just going to simply keep ours in there. We're in at 25 shares stop at 148.48. Reminder, that's not a price guarantee. That's a trigger. So if the stock trades through 148.48 to the downside, now we have a market order to sell, and that cannot guarantee price. We also have gap risk. But before a trader wants to raise this stop now, they likely want to see higher highs. So they want to see a move that creates a new level of potential support, and then they might consider raising the stop. Now, ultimately, we're not going to make a change today, but I wanted to talk about it because the trade continues to work, and the trade continues to work incorporating our stop exits where we incorporate average true range in setting them. Whether it's a trend line support or horizontal support, we want to be considerate of average true range to give us more wiggle room. It's not going to work every time, but it can give us that opportunity for more wiggle room to stay in the trade a little longer. And that's ultimately what's enabled us to stay in this one as long as we've had. We're looking at about 10 weeks now on the chart here, and the trade continues to work pretty well. Overall, we are up. I thought I had my percentage in there. I guess not. Percentage, profit, loss, well, /L, there it is. So that trade, okay, we're up about 11%. That for some traders, that might be their target, and maybe they're thinking about exiting. But if you're waiting for the trend to break, you definitely haven't had it just yet. All right, we're going to wrap it there, everybody. Much more to come from us on the channel, as always, here today. It's a busy Thursday. I'll be back for after the close this afternoon at 4 p.m. Eastern. We'll set the table for tomorrow. I will be out tomorrow traveling to Dallas for the Market Drive event. For those of you that'll be there, I look forward to shaking hands and saying hello, maybe taking some photos with all of you. Follow Barb and me on X, Barb Armstrong CS, Kevin Horner CS. And if you like the discussion, we always appreciate the thumbs up down below, everybody. That really helps us out in getting this archived and back into the YouTube for other viewers like yourselves. So with that, thanks for being here. Have a great rest of your Thursday, everybody. I look forward to seeing you all again real soon.